Good morning, and welcome to the first one of these that I've done in a while now. I used to do this kind of weekly update thing both on YouTube and previously for my subscribers over at Newsmax. But this is going to be at minimum twice weekly market review, and maybe more often than that. We'll see. But this will be exclusive for subscribers, and as a thank you and as a way to kind of evolve the private blog. Part of me feels that at a certain level, it's easier to do short video market updates and whatnot, and chart analysis and all of that, as opposed to writing something up. And to be honest with you, with the amount that I write, frankly, there comes a point where sometimes I just want to put some slides together and talk into a microphone. It's not just easier, but I think it's actually better overall. So let's get started. Welcome to the new format. So it looks a lot like the old format, just slightly different slides. Okay, so I want to talk about Jim Comey this morning as really briefly, as a metaphor for what's happening on the left and this whole reaction to the Trump-Putin summit from the other day. Comey came out this morning and said that anybody who votes Republican this fall is a traitor to the effectively a traitor to the United States, which is rich coming from a man who is actually literally a traitor to the United States. So it should be obvious to everybody now that this is not going to end. It's only going to ratchet up from here, and that's only going to then have the effect of creating even more political instability at the top of the United States, and therefore it's going to have its effect across markets. And we've been under the assumption, if you read this month's newsletter and the other issues that have come out, for those of you who are newsletter subscribers, you'll know that we're handicapping a sovereign debt default on a worldwide basis going forward. And it's beginning to start in emerging markets in like Turkey, and it's going to move over into Europe, and then it's going to move into the U.S., and then it's going to move into the U.S. And what we're going to see in the short term and what we're seeing in the short term, and I got the charts to prove it today, is a strong move into the dollar, which is going to ratchet up it's going to continue to create a kind of feedback loop, which should spiral out of control sometime before the end of this year, early next year. It's been interesting to watch them continue to hold this together, but I'm not completely convinced that they can continue to do so. So yesterday's testimony from new Fed Chairman Jerome Powell was very hawkish, and he made it kind of abundantly clear that they're going to raise interest rates at least 2 more times this year. I'm sure that I'm recording this before his testimony today, so I'm sure he's only going to continue the situation, those remarks. I don't see anything from Powell that says otherwise, and to be honest with you, I also think that at a certain level, President Trump is looking for a stronger dollar in order to drain emerging markets of liquidity and affect his geopolitical goals of regime change in Iran, strong economic sanctions on Europe and North Korea and the rest. And China. All right. So, and then this has caused, and this is we're going to show in the next couple of slides, that you should start really seriously looking at being long U.S. stocks, and while you watch gold sink on dollar liquidity issues. And I think there's 2 things going on here. I think there's stocks becoming a safe haven trade at the same time as gold being taken down on liquidity issues. So let's get to the charts and I'll show you exactly what I'm talking about. So let's look at gold. Because gold is really interesting, and this is the big long monthly chart of gold. And in the future, I'll probably just put weekly charts up for those of you who are a little bit more interested in trading these markets. But I wanted to bring up the situation here in gold. It's very important to understand that this resistance at the post-Brexit high here of around 1375, and this really strong band of resistance between 1350 and 1375 is formidable. And I said it earlier in the year, and I'll continue to say it to you over and over again. Until we get through this resistance, there is no gold bull market. And as a matter of fact, 1, 2, 3 major attempts to push through that resistance, and the third time failures are almost always met with major selling. Now, we've had major sell-offs after hitting this resistance in the past, culminating in like the 2015 low down here, and then the 2016 low. But what we're seeing now in gold is absolutely reminds me of like March, the summer of 2008. And I've said this before, and it happened in 2016. I felt the same thing was happening, and I feel the same way. The same thing is kind of happening now. I really felt after Brexit that we were getting that same kind of setup for a potential washout in gold and a potential slingshot higher in stocks and the dollar. And we did, but it wasn't enough to create a real, true, what Martin Armstrong would call a phase inversion of the market. And we're not there yet. So, but this could easily be that same thing playing out this summer here. Action in Q2, which would be these 3 bars here, represents an absolute 1 bar reversal, because this is your Q1 numbers. These are your Q4 numbers. So there's definitely if you look at the quarterly chart, it's a 5-quarter up move in gold right into strong resistance, and then a 1 bar reversal. And so this selling isn't done. Your support for gold starts here at 1208, 1209, and then at the 2016 low, depending on how severe things get. And the more severe the things get in the short run this fall, the more likely it is that we're going to hit gold numbers back into the 1100s. So for those of you who are, that are long, some of our gold related stocks in the portfolio, it's going to be, at this point, it's going to be a rough summer, but it also gives you the opportunity to deploy cash from the dividend bearing stocks in our portfolio to make up the difference, right? And that's part of the long-term strategy, is to have a good set of income generators in order to deploy capital where you see the best value, either to continue doubling down on your income stocks if that's what you need, or to be able to move them into more speculative investments to catch bottoms and make and capture big gains. Okay, but that's not how I run the portfolio for Gold, Goats, and Guns. I run it much more conservatively than that. Okay, so talking about the S&P 500 real quick. Yesterday's close was 2809.55. Here's the important. This is the monthly chart, right, of the S&P. You've got good support here between 2550 and 2650. Look at all those long tails down here. This is like really, really strong behavior. And even though this does constitute a two-month 2-bar reversal, and we haven't gotten a close above this high yet, and it's taken 4 months to get there. I'm not saying that this is an incredibly strong monthly chart right now. It's not, but it is a very interesting beginning to Q3. So if you look at this as Q2 and you look at this as Q1, a close in July above 2802 will set up the S&P in August to take a run at this peak here at around 2850, and then obviously the all-time high at 2880. Looking at the statistics, the quarterly statistics for the S&P 500 behind the curtain, which I do, makes that potentially a very high probability occurrence. It's not like these are big moves that have to be. It would not take inordinate behavior in the S&P 500 or out of the box 2 sigma, 3 sigma behavior from the S&P 500 to push the Q3 close above 2,900. And if that's the case, while gold is breaking down and the dollar is rising and the euro is retesting support, that's telling you that we're getting into that situation, along with that situation of a shift, a fundamental shift in global capital. And we're still getting all this pre-positioning stuff out of the way. I keep talking about there being a big run-up in the U.S. stock market as a reaction against the sovereign debt crisis. We haven't even begun to see that yet. Honestly, most of 2018, this is all just consolidation of a big move from 2017. It was violent. Yes, it's a little bit more volatile than it was in the past, but that's just telling you how worried a lot of investors are. Okay, and this kind of choppiness, but structurally, as far as I'm concerned, this is still a very bullish chart. This is telling me that we're going to see 4,000 in the S&P 500 well before we ever see 2,000. All right. And then lastly, let's talk about Bitcoin. Because Bitcoin is interesting, finally, for the first time in months. So I want you to, this is a kind of an example of an advanced level chart read. So we've got this great breakout here in Bitcoin up around 7,500 today. Here's your long downtrend. Here's your attempt at a 2-bar reversal. It failed. We closed here at 67.30 or so. The high here was 68.50. That's not a reversal signal because we didn't get a close above the last opposite direction bar. And then June, or last week, was itself a 1-bar reversal, right? So this looked like we were going to get one of those moves where this was a weak bounce and then another crash, and everybody was talking about how we're going to see 5,000 in Bitcoin or 4,500, and now this week we're back above 7,500. And if we close this week at this level, this would be a very good sign that we're beginning to see a bottom here in Bitcoin. Now let's look at the advanced chart read and why the big black arrows. So here's the big drop coming out of January, right? Intense selling. We get a 1-bar reversal here, which doesn't make it through the high of this bar over the course of the next 4 weeks. This bar here acts as this close, or as this open, and this high act as strong resistance. This band here acts as strong resistance. 4 weeks, it rolls over, and then we get a weak reversal signal. So here, lots of hope, right? Big downtrend, lots of hope. Hope fades, hope fails, and then a tentative 2-bar reversal with a 4-week uptrend and a 1-bar reversal to the downside. And so a little less hopeful here. But a more powerful bounce, technically speaking, which still fails. But it fails right at the same around the same level of resistance, support, not really support, because we did violate support, and we did close below this support level here. But then we get this done, and then we have a 4-week consolidation period within this bar, and then a big breakout to the upside here. This is telling me that the bears are losing, that the bulls are gaining their legs, and the bears are finished selling. So this progression of the psychology of this chart, very, very interesting to me. It gives me hope that this bounce in Bitcoin has more legs to take it back towards 10,000, and this high here at 10,000. At the very least, any move above the high here of around about 7,500 or so, or even back up towards 8,500, would be incredibly good in stabilizing the market. All right, so that's what I have for this for today. I'll be back in a couple of days. We'll do this again. I'm going to try and keep these short, 15 minutes or so. So y'all have a great afternoon, and keep your stick on the ice.